Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time to have a look at the markets again. Our weekly look at the SPY, the Nasdaq, the PCC and the VIX. And well, we've got a few things to discuss. But first, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally, Tier 3, for £15 a month. You get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you have chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening guys, and now back to the video. Okay, welcome back guys. So before we begin and start digging into counts and stuff, I just want to hold my hands up and say that I'm probably going to be backtracking on what I've said previously last week. It's a similar idea, but it's not the same as I was expecting, and I feel like recently, since the market's topped out, I've been going back and forth side to side in every which bloody direction with the count lately. I've had some consistent ideas, but they keep shifting, and that's just part and parcel of the nature of Elliott Wave. So the first thing I want to start the video with, and this is for my YouTube audience, if you're one of my patrons and you're on the Discord, you know how I think about this already, which is looking at Elliott Wave and whether you get confused over Elliott Wave and whether you get stuck or not has got nothing to do with looking for trades. Looking and setting up trades has its own procedure and its own methodology, and we go about that in our unique way. And if you can't find something that you, or I should say, sorry, if you find that you can't understand something, then you should go and look for something that you can understand, or at least have a better idea. But since this is a technical analysis channel primarily here on YouTube rather than a trading channel, and we want to try and make sense of these bigger markets, you know, like the SPY, the Nasdaq, and we look at oil as well, or will be next week, and we look at the Russell, we look at cryptos, alts and Bitcoin, and gold and silver as well. So we want to try and make sense of these bigger markets, and sometimes it's just not always going to work out cleanly. So this is roughly where we left off last week's video. Right, this idea that we peaked in a primary one, and the alternate idea was that it was still a 3 and we were going into a 4. Okay, and we had a multitude of ways we were talking about that, but the primary count was a zigzag into another zigzag. That's what we were expecting to go deeper, right? And what I basically was expecting was that the second zigzag was going to be much more aggressive than the first zigzag, and we were going to get 1, 2, 3, 4, 5 into an A, 3 into a B, and we were going to come down again. And we left off with what looked like we were coming up from the 3 into the 4. Well, since then we've transgressed upon what would be the price territory of the 3 of the wave 1 with the wave 4, excuse me. So that's bullshit. So what we're going to do is just delete that, and we are going to do this. A, B. So we're using the same count, but we're repositioning where it completes. Now, let me try and talk you through all the various things that I'm not happy with. But this is just the way it is. After topping out up here, we're expecting a corrective move to this whole impulsive structure, this whole motive structure, right? And whether it's a primary 3 into a 4, or whether it's a primary 1 into a 2, then coming down off of the high, something like 1, 2, 3, 4, 5, right? Just 5 clear waves, an impulse. That gives us an A, right? Then we get 3 into a zigzag, what will be a zigzag for a B, and then another 5 down, right? Alternatively, we come down in 3, right? And we come back in 3 to most likely what would be an expansive pattern, and then we come down in 5. This is still, as you'll see later, this is still an option. Or we come down in 3 to go up in 3 to go down in 3, and we get a flat, 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 or maybe we get a double zigzag like we're talking here, right? We thought zigzag, bigger zigzag it was going to be, like that. Now that didn't happen. So no impulsive move down from the high means that we can't go 1 and we can't go A, right? No free wave move back above the high or within 90% means that we can't go A, B for a flat. Okay? And now that we've had another 3, that we've had 3 here, 3 here and 3 here, this is shorter than this, which means that there was a possibility that we were going to have some kind of like diagonal. So we've got 1, 2, 3, but now we've had an impulsive move, a move back, and now we're moving up again. So the zigzag that would have to contain this diagonal should probably look like that, right? Rather than like this. Now this becomes impossible if this length gets larger than this length, and then it can't be a diag. So we're going to dress that up in a little while because it's still possible, but it doesn't feel right to me at the moment that this whole thing's a diagonal off the high. Now we're going to, like I said, we'll look at it and we'll keep it as an option. But what it looks like to me is a free wave move and then a free wave move with an X wave in between. No impulse down off of the high, right? So no obvious way of saying 1 into 2 into 3 into 4. So no obviously bearish count has evolved. And since the idea of this being 5 broke down into an A not being an A, then this is just another free wave move, right? So we've either bottomed, and it's either a 1 into an insanely short 2 in terms of time, or we've got to give that idea up and go back to the idea that it's a 3 into a 4. I'm happier with this, to be honest. I'm not so sure about the wave degree anymore. I'm thinking that if that's right, then this whole thing has to be downgraded into intermediate degree, which pushes the idea of this being a new bull market. It just pushes it out so far into the future that it's just, well, it would be enormous. It would go on for years and years and years and years and years yet. So that's one way of looking at it. The other way of looking at it is we're going to come up, and this is a short primary wave 4, and this was a short primary wave 2, and for some reason there's no alternation between the two. They're both zigzags of a form. One's a double, one's a single, and we're now going to work our way up in 5 because this off of the low looks bloody impulsive. Right? It won't look like that, obviously. It would look like, well, that's 1, 2, 3, 4, 5 into a 1, into a 2, into a 3, into a 4, into a 5, something like that. And we'll work our way out. I mean, the 5th could be way further up. We could put further up here, right? We could go 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, and work our way over there like that. Now, that's the issues I'm facing at the moment. So let's talk about the alternative ways of interpreting this. So let's just pick out we want to pick out these elements here. Okay, and we're just going to single these out and put them in their own little area for a moment. Put them in their own little folder. And this is D, Z, Z, correction. And we want this somewhere near the top, so we can find this and relate it to any of the other patterns we want to look at. We'll reorganize our things at the minute. So with these, we want our bullish alternate here, and we want our primary top up here as well, because this is all related to this correction. Whether it's 3 into 4, and I feel one of the things I found frustrating, to be absolutely honest, if you go back and watch my videos on my channel going back months and months and months, we were expecting for the longest time a move into a primary 3. Right, we originally thought it would be here, then we had a correction and a move higher, then here, correction and move higher, and then finally we've had this. And maybe we were just anticipating it, and because of the scale of it and the length of everything and the severity and the time it's taken, we started thinking, well, maybe it's all just a move into a primary 1 high. So now that we've considered those ideas, let's look at something else. Let's do the same. Let's since it's the same count, we can delete the part for this primary wave 2. Okay, and now we're going to look at a couple of alternates. They are my primary counts at the moment. We've completed a double zigzag and we're moving higher. So now let's look at what if it's not that. Because if it had just been polite enough and courteous enough to just give us a clean impulse, at least one more would have been nice, but instead it just wants to give us a series of zigzags. So if it's giving us a series of zigzags, it's either a diagonal, right, or it's a combination of zigzags. Right. There's one other alternative as well, which we're now going to look at. So first one, what if this is too short and we need more time? So we're going to say A to here, that's a zigzag. We're going to say B to a new high and C to a new low. How does that work, Tom? So the way this would work as a flat is that we have a 3-wave move here, a 3-wave move here, and then a 5-wave move here. Okay, so we're roughly not going to go anywhere price-wise. We're going to do a big trip, but we're not actually going to basically end up anywhere very far from where we've been. Okay, so we break this down into, and the problem with speculative patterns like this is there's so much that has to play out between now and actually completing it, that you want to be trading this as an impulse anyway. I think if this looks like 5 waves off of a low, and this looks like a pullback, so this looks like a potential impulse higher already, right? So coming off of this low, I'm bullish coming out of here. It may last a little while, it may last considerably longer, but that's the only way I can really see it at the moment. And then we get 3 waves into here. Okay, then we get 3 waves into here, and then we get 5 waves into here. So we're getting a flat inside of the B wave of a larger flat. Okay, it's not as complicated as it sounds, but something like this. Okay, don't worry, I can hear some of those people say, Tom, it's just a diagonal. Yeah, it could be, but that looks like a very weird relationship to me. So we'll deal with that last. And then finally, we'll come down in 5 to complete the C. Like so. Okay, and that's our flat pattern. Zigzag in the A, flat in the B, 5 waves down in the C. Flat. So we can now program that in on either of the corrections. So we could say, here's the primary 1 top. We shift the 2 over there. We say, alright, there's the flat. 2's here. And this takes way longer. Pushes us out into the summer. Right? But we've still got all this to enjoy to a new high first. And it's going to be an impulse. Okay, it just won't be 1 and a 2 as it come down lower. Okay, but it will operate like an impulse in the meantime. Okay, and then finally we've got the zigzag, which I think is going to cancel itself out pretty soon. So ABC into a 1, ABC into a 2. I think it's going to have to be there. How we explain that, I don't know. It's not 5, it's not 3, it's something else. I mean, if that's 3, that's 1, 2, but that overlaps. And that's 3 waves. I don't know. So basically, the best I got for you here would be, if that's 1, then we can link up 1 and 3, and then we can link up 2 and 4. Right, now 2 and 4 are seriously running out of, 4 is going to run out of room at this point. So what we've got to do is take the length of our proposed 2, put it at the 4, and here's our cutoff point. So let's give it maximum allowance. It's still got to look like a diagonal, and at that point it's just looking like a channel. So we want it to at least look like a diagonal. It can't come beyond here. Can't come beyond that level. Right, otherwise it's getting too big, it's expanding. Okay, and you say, well, what if it's an expanding diagonal? Well, this isn't longer than this, so it can't be. 3 would have to be longer than 1, 4 would have to be deeper than 2. This is the idea that 1 and then 2 and then 3 is shorter than 1, 4 is shorter than 2, and 5 is shorter than 3, and we get a diag. So let's label this as motive, which the diag is 1, 2, 3, 4's coming, 5. All this needs to be downgraded into minute degree, like so. Okay, and this was, we're gonna lock this in. Gonna lock this in place and put a label on it. Right then, so there's the diag. If we come back beyond this level and we continue to impulse higher, then like I said, I'm bullish off of a low here. My primary says I should be bullish off of a low. It says I'm completed, or it says I'm coming up in a large B wave of a 5 wave move into a flat. You know, the C of a B, if that makes any sense. Which it does, trust me. So if we go beyond here and we continue to impulse, then the idea that all of this is an A, which is what we'd be saying for a diag, right? We're talking a 3-wave correction from the high. So 5 into an A, B, C, and that's how we get significantly lower. Right, something like that. That would be the way we get significantly lower down. And this would be 5 into an A, B, then maybe an impulse. You've got a diagonal with an impulse. Okay, so there's another alternate, which gets cancelled out pretty soon. Okay, and like I said, I'll just hold my hands up and be honest, it's been catching me out. I cannot emphasize enough how you don't have to know what's going on if you don't want to trade it, and if you don't know what's going on, perhaps you shouldn't. Go find something where you are more certain of what's going on. Okay, and then still obligated to look for the right setup anyway. So there's our options, and I'm going to leave the Elliott wave analysis there, and just before we go off and look at a few other things to say, that's my preference for the moment. Whether it's a 3 into a 4, I'm not 100%. I'd favour that over it being a 1 into a 2. That just seems too fast. So perhaps that should be intermediate degree 3 into 4, and this should be intermediate 1 into 2, and all of this needs relabeling and downgrading. I'd be happier with doing that than calling it a primary degree correction that lasted 50 days. That seems short. It's seriously short. Intermediate degree 50 days? Yeah, alright then. Primary degree? Bit dodgy. So maybe downgrade the wave degree. So I must remind myself to do that. 5 is going to be out here somewhere. Okay, extend this right. Now, if that's 3 into 4 into 5, I'd expect 5 to come up here somewhere later in the year. Right. So for the meantime, I'm bullish. This looks bullish off of here. Come back down beyond these lows here, and yeah, I'm wrong again at that point. Okay, because it hasn't come up into the flat. The only count we've got that takes us lower, this is wrong, is our diagonal. Right, that would take us lower, but we have to come in before this 448 spot 2-1 with the 4. Right, so we've got a count to take us lower. So I guess that's all we need to think about really. If we come down, break that low, does it still look like a diagonal? If we continue to move higher in an impulse, do we take out the diagonal invalidation point? If we do that, then I think the options are primarily that we've bottomed, and now we're impulsing higher. Right. Finally, you got the flat, which is we're going to impulse higher anyway, but then we're going to turn around and make a lower low and absolutely fuck everybody. Because that's what expanding flat patterns do. The C leg, or especially when you've got an interconnecting B wave with a C leg, which would look like an impulse, dragging you into a B wave top. There is no way of seeing that coming by looking for divergence in momentum indicators, looking for divergence in volume, but that still will feel like an impulse to a new high. You'd be way more likely to label it 5 than an intricate B wave of a flat which had a C in it. You see what I'm saying? You just wouldn't think to do it. You know, so, and I'm not saying I'm clever for thinking of it, I'm saying it's kind of pointless thinking about it, because so what? So you can come up with, yes, that might be right, but you can't do anything with it. So anyway, I'm ranting now, so let's just forget that there. That's the primary. We've bottomed, we're going to continue to impulse higher. If we don't and we go lower, then we should consider the diag. Okay? I prefer the idea of it being 3 into 4 rather than 1 into 2. That just doesn't seem believable. So I'm just, as a reminder to myself, I'm going to change this wave degree down to intermediate, which means everything below it has to now go down a notch as well. And I'll come in and, you know, label all this down. So one other thing I wanted to mention was this was a potential 3-wave swing, WXY, but then we went lower again. So I have seen WXYXZ to get down here. Okay, fine. We've both gotten into the same place. It doesn't matter at that point. I would have liked A, B, C in 5 waves, but we didn't get 5 waves. We had 5 as a potential truncation, and then we went lower. So that was no bloody use to me either. And we overlapped in the meantime. So we can't use that as 5 waves. So what I've got here is just a vile zigzag diagonal with this. If it's gone 1, 2, 3, 4, 5, teeny tiny 4, 5, massive 1, 2. Literally the best I can do to get a high out of this. Alright then, so that's the SPY, guys. Let's have a quick look at volume here. So we've got higher volume in the higher low, and we've got lower volume in the lower low. So we've got divergence in the volume here, weakening as we make a lower low. Argument for it to have bottomed. Let's look if we can see similar divergence in momentum. Okay, so did we get positive divergence between the lows? Now we've got that's the 1 hour, so let's come out to the daytime frame and see if there's anything worth shouting about. Right, so we can see that tick off in the volume, and sure enough, we have divergence between those in the RSI, and we have divergence between those in the MACD. Still in negative territory, little green bar appearing on the histogram. Buy signal, don't like to use that phrase as in go out and buy it, but it's traditionally just called the buy signal when momentum turns positive and starts heading towards positive territory. It's not in positive territory yet though. Now an impulse out of here, right, and a pullback into positive territory, there's a better buy signal if you wanted one. Alright, so bullish divergence, dropping off of the volume between 2 lows, supported by divergence as well. An account which kinda supports it is going to have to be good enough in the meantime. Alright, so back to being bullish again. So flip-flopping all over the place, but that's just life. You have to go where the price tells you, and you have to be flexible and change your mind when the price tells you to change your mind. I had someone on the YouTube comment section just the other week telling me that you have to have conviction to trade, and it's like, of course you do. You have to have absolute conviction when you take a trade. It doesn't mean you have to have absolute conviction about your Elliott wave analysis on an asset. You adapt that to whatever the price is telling you. Okay, but apparently some people just can't understand the difference, which is fine. Alright then, so let's now have a look at our moving averages here. 60 still above the 250, 250 still trending higher, just everything else is trending down lower. The 10 and the 20 are coming down to meet the price. We're currently below the 20, above the 10, back above the 250. Now translation in a back into positive momentum above the zero band in the MACD and above the 60 exponential moving average, back above this median line. All of that's positive if price can pull that off. Okay, come back up here and get rejected, maybe that diagonal pattern's playing out. Okay, but for the meantime, back above the 250 is positive. No death cross here, yet. If it were to come at a later date, then it might be significantly later, because there's still a hell of a gap here, right? Now, if we were to get that diagonal and push down, would that even be enough to bring the 60 over to 250? I'm not sure it would, and we all know how I feel about death crosses signalling lows, not necessarily bottoms but lows. So that's how I see the SPY at the moment. So let's come over now and have a look at the Nasdaq. So we're probably going to have to do some updating of the count here as well for the Nasdaq, okay, because we're going to have to basically bring about the same thing. See, that was my old count, the primary bear into the 1, and I wanted so badly this to just be 5 waves down, right? It even kind of resembles it, except it doesn't work. There's no subdivision here, that's 3, and then you've got a truncation if you wanted 5, and there's no subdivision here as 5 that works because it can't be a diagonal. This is too long, even though the beginning of it is contracting, for the rest of it is expanding. So we can't get 5 down here either. So it's just not clean enough of the high. Okay, so then we've got this idea, WXY. It's the same as the SPY, but it's deeper, significantly deeper. Right, looking more like a 50% retracement of the 3 rather than 38.2. Now I should have mentioned that in the SPY, sorry. If we go back and have a look, the 3 goes beyond the 100% the length of the 1. It does in the Nasdaq as well. So the 3 is not shorter than the 1. Now there's no rule saying it has to be. It just can't be the shortest of the 3 motive waves. So maybe we get some kind of blow off move in the 5th if the 3 is significantly shorter. Not saying that's going to be the case, but quick reminder. Let's turn this into a 4. 38.2. Right, we come through it, but we come right back above it. That's pretty standard for a wave 4. Okay, it's significantly bigger than the 2. That's not standard. There's no varying alternation between the 2. That's not standard either. Like I said, there's things not to like about it, but you've got to work with what you've got to work with. And the Nasdaq is way more extreme. Now that makes sense considering what's in the Nasdaq. We go beyond 50% here for a wave 3. So this doesn't feel like a wave 3, does it? Yeah, this feels like, you know, your primary 1, and this could be deep enough for a 2. Right, but then you've got to ask yourself, what have you retraced overall? Why? And the next question you've got to ask yourself is, why does TradingView constantly move around parts of my waves? Right, anyway, so let's have a look at what we've retraced overall. Right, now it's only 38.2. So from the start, it doesn't look deep enough to be a 2, and from the 2, it looks too deep to be a 4. So what are you going to do? So let's just leave that for a minute and come into how we've gotten down here. And I need to get these into some semblance of order. Right. I think what I've had to do here, I don't have to force a diagonal into the 5th at the top at least. I can get a 3 wave. I think that's a double zigzag there. That's a zigzag and that's a zigzag. So I can get a WXY in there for the 4. Like that. Bring this down to minute. And then I can see clearly 5 waves in here. Very quick, very sudden. But it gives us a 5th of a 5th of a 3, and it's a truncation. Yeah, I don't like them either. But if I want it to top out at the same time as the SPY and make sense in terms of how it got down to below, I've got to do this. Okay, because I can't get an impulse down here. That's 3 waves. I can't get an impulse down here. That's 3 waves. Okay. And God knows what that is. Okay, because it's either a zigzag of a truncated C. This can't be 1, 2, 3, 4. And it can't be 1, 2, 1, 2, 3, 4, because it's still got an overlap at a smaller wave degree. So it's just a big mess. Coming out of here is looking strong though again. So we're in the same position. That's going to be the primary count for the meantime. I will get around to putting in the other options here as well, because we could still have that expansive B wave and C for a flat. Can we have the diagonal here though? Well, we've got a lower, if we take the truncation, then maybe. So let's see if it's technically possible. Once again, that zigzag's looking dodgy. Right, you've got to basically turn it. If you want it to look like a diag, it's got to turn around pretty much now. And if you're expecting 3 waves, that looks weird. So it looks better on the SPY. But you'd have to pretty much turn around and head down now for a 5th. And this would become 1, 2, 3, 4, 5 into the same idea. But I don't think we need to waste our time labelling it. We've got everything in alignment now. I did originally also have the idea of 3, 3, 5, but we never got a clear 5 that subdivides as an impulse. And we've already just discussed the problem of subdividing as a diagonal. Right, it's still possible, but it's running out of space. So let's just remind ourselves where that would be. If we're going to get the diag, we've got to turn around before that point there. I'll lock that in place. That needs to go into that count now as well. There we go. So then we can say diagonal, right? 1, 2, 3. And like the thing is, people, if you're going to get somebody who's going to want to say, well, what if that's A? Yeah, there's not 5 waves in here, but right, not with it's overlapping and it doesn't work as a diagonal on its own. So we've got that problem. No matter what we're doing here, 4's got to come in before that point. And this is just to get an A. Okay. Or if you're uber duper bearish, a 1. And you think that you see like literally the end of the world. But I'm not saying it couldn't be, I'm just saying like it doesn't look right, but so that's a diagonal count. Right. Turn that off. This could be 3, 4, 1, 2. Honestly don't know. It seems odd both ways. You're looking at it. We just seem to be impulsing off of the low. That's the one thing we seem to be doing. Let's look at the daytime frame, see if we picked up the same divergence, same bullish divergence we saw in the SPY. It's even stronger here actually. Significantly so. Close to close. Sorry if I whipped off on the earlier one. I should have gone close to close for divergence in the RSI. And there it is. Right. Here in the MACD as well. So that could well be over. And that's why it's going to remain our primary count for the moment. But the wave degree now, I need to see what comes out of here. The SPY feels like it's more proportional at the moment, whereas the Nasdaq's gone just a little too far. It just hasn't had the dignity to do it in a nice clear fashion. Kept us all guessing. So let's move on to the VIX for a minute. Now this is another thing, right? If I had, 10 quid for every time someone predicted a VIX explosion over the last week or last month, I'd already be able to put my feet up and stop doing this. It hasn't blown up. First war in Europe since the end of the Second World War, and it hasn't blown up. Alright, so there doesn't appear to be an appreciation of any significant risk in the American markets. It just doesn't. Right. If anything, you could argue that perhaps capital is flowing out of other places into the US. Volatility's picking up, but the trend has been up since 2017. Alright, now you might say, oh, we've had all these spikes, Tom, that have come up and come down, come up and come down. I'm looking at the underlying behaviour of the volatility index, right? We trended down, 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 since we've been trending up, 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 up. Every time we come back to the trend line, we're a little higher in overall volatility than we were prior. And we have these huge spikes in between. But we haven't had one yet. Maybe we're going to get one. Maybe we're just going to doss about again. You know, it's not a convincing picture either way. Now, if we look at the PCC for a minute, I've pointed this out for months now, ever since I've signalled that we had new lows, and that was back in October 2020. Right? I first pointed out that we'd come down to new lows in the PCC. So once you come down to extreme greed and complacency, you're going to go back up to extreme fear and panic. It's just a matter of time. Okay, it can take ages. Right? It can happen quite quickly. That was like 380 days. Right? It can happen quite slowly. That's like 700 days. Okay, it can happen somewhere in between the two, right? And now we're already we're already more than a year in, but we're heading towards an extreme fear and panic setting again, where we will reset this thing and come back down to greed and complacency again, and continue the cycle of human behaviour. So we're getting there. We haven't zipped straight up. We could still, but I don't think we're going to. I think we're just going to continue to meander into higher areas until it becomes a problem again. Now that tends to fit the idea 3, 4, 5. 3, 4, 5. Proper panic, collapse. Okay? But that's guesstimation. Really, at the end of the day, guys, I can't call on any more than that at the moment. I've adjusted the Elliott wave channel using Elliott's second method of taking the 2 and the 4, projecting forward to find the 5, since the 1 and the 3 don't make sense. This accommodates the deeper 4 in this instance. It looks pretty screwy on the Nasdaq. If that diagonal down doesn't happen, and we do come beyond the diagonal invalidation point, I don't have a solution to get lower. In the meantime, not in the meantime. The only one I have is that long-winded flat, like that. That's the only way I can figure out how we'd get lower if it's not a diagonal. So, since it looks pretty dodgy, I'm going to favour the idea that we've got a completed correction here, and now we're going to start impulsing out. Right then, guys, I'm going to leave it there. Thank you very much for joining me on this technical analysis of the US stock markets. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And if you're interested in joining the Patreon, now is the perfect opportunity to do it, as it's the start of the month. There's a link in the description box below. Head over, have a read of the tiers, see if there's anything you like, and feel free to sign up. Also, if you're not following me on Twitter yet, I only ever use it to post links to videos here on YouTube, but it's just a way of making sure people get notified. So if you're not following me yet, please do so that you don't miss out on any future videos, because YouTube doesn't always seem to notify people. Alright guys, thank you very much for joining me, and thank you as always, big thank you to my Patreon subscribers, and I will see you soon. All the best. Bye bye.